how do you capitalize on this and establish your own plan? This is what I'm going to show you. So I'm going to pull up a whiteboard. And the first thing that you want to recognize as you're considering how this might work for you and the benefits of it is you want to look at what Robert Kiyosaki talked about in his book, Rich Dad, Poor Dad. That book is full of financial principles. One of my favorites that he talks about is pay yourself first. When you make money, pay yourself first. You're the most important. That means you set money aside for yourself. And my recommendation is that you set that money aside in an infinite banking policy. And you'll see why as we go on. Could be 5% of your total annual income, could be 10, 15, 20%. But that's the first thing you establish is the dollar amount that you want to set aside into an infinite banking policy. Once you know that dollar amount, now we have to talk about the proper structure. And this is what sets infinite banking apart from a traditional whole life insurance, universal life. It's the structure. So I'm going to show you what that looks like. Pretend right here that this is a policy. There are two components of an infinite banking policy. The first one is called base premium. Now, the problem with most life insurance policies out there is that agents will take every dime of your premium and they will only put it into the base portion of the policy. By doing that, what's happening is you're buying a lot of death benefit. This policy doesn't have very much cash value. It takes a long time for the cash value to build up and to grow. All your premiums basically going to buy life insurance. It's a death benefit play. And so you feel this burden. Oh my gosh, I've got a massive premium. I'm never going to be able to use this policy. It's just going to go to my heirs when I pass away. It feels very expensive. And these are high commission products because as an insurance agent, how are we compensated? On base premium. This is why most agents want to take all of your premium and only put it into base. The other reason is they just don't know what else to do. I mean, frankly, they just don't know what else to do. The way we structure an infinite banking policy, we add a turbocharge rider up here called PUA. It stands for paid up additions. Paid up additions. And I don't want to get into like all the fine details and go down a rabbit hole. What you need to know about paid up additions is this is what turbocharges your cash and your rate of return. So instead of all your money going into base premium, we want to see at least half of it, if not 2/3 or more, going straight into PUA. Well, what does this mean? This means that we get to max out cash value. This is like a savings account on steroids. It's a turbocharged savings account. That's the best way to think about it. A properly structured policy, we're maximizing the cash value and we're minimizing the death benefit. An infinite banking policy, it's not a death benefit play. We want to put the least amount of money into death benefit as possible and the most amount of money that's possible into cash value. That's how we get the power of infinite banking. And if it's done correctly, 9 out of 10 times, you'll outperform the market with guarantees. It's very powerful. Now, there is one thing to be aware of here. Right at the top, we have what's called the MEC limit. The MEC limit says once a policy is in force, there's only a certain amount of money that can go into that policy, the max funded cash value. We don't want to cross the MEC limit line because then we lose the tax-free benefits of the policy. We want the policy to remain tax-free. I'm going to show you more of that here in a few minutes. So I get this question often. Barry, what if I want to put more money into my policy, but it can't take it? Well, guess what? You start a second policy. or a third policy or a fourth policy. Remember, this is your own banking system. So just like Wells Fargo or Chase or a US bank wants to grow, what do? They open another branch. What do? You open another policy. Very simple. There are ways to do that to capture good health and those things that come into play. But what I'm showing you on the board, 95% of agents don't know, they don't understand. This is the true way to structure an infinite banking policy. We want to maximize cash, minimize death benefit.